Okay, so it looks like we're sitting right at 10 o'clock, just about. So welcome to today's presentation on income tax simplification. My name is Matt Brotherton. I am the web developer and communication strategist for the Department of Revenue. I am here to offer technical support and to take notes and gather questions for Rachel, Adam, and Brian, who will be doing your presentation today. We will ask that you post all of your questions in the chat, as we will answer them all at the end of the presentation. They'll wait until after they're done to address everyone's questions. Once we are finished with the presentation, we also will allow you to raise your hand. If you look at the bottom of your Zoom screen, you'll have reactions, and under reactions, you'll have a raise hand function. And then you can just ask your questions that way if you would like, or like I said, put them in the chat. We'll make sure they get answered. A couple of other things that you might want to know is if you would like to, you can change the name that you appear under here in Zoom. In the participants window, you can find either if you're in the Zoom desktop application, it will be 3 dots, or in the web application, it will just say more. Click on that and you'll have rename, and you'll be able to rename yourself. As you'll notice, all of us here in the Department of Revenue, for the most part, have added DOR next to our names just to make sure everyone knows that we're here and we're on the team for the presentation. We will, like I said, we do ask that everyone's questions will be at the end, so please make sure that your microphone is muted. I will do our best to make sure if someone gets unmuted and doesn't realize it, we can mute them again real quick. But other than that, we are recording. This is being recorded right now. The recording will be available on our website within 24 hours. Usually the last one of the presentations we've had recently took a lot longer to process, but just as soon as Zoom can process the video and get it to us, we'll get it up on our website at mtrevenue.gov/resources/business income tax webinars. And I'll make sure all of these links are available in the chat. I'll go ahead and copy it in right now for anyone who missed it before, and I'll make sure they're available at the end of the presentation today also. So without further ado, I think I'm going to ask Rachel, are you the one starting out today, or?
Yes, I am. Well, right. Thanks, Matt, and thanks for helping us out, Matt. My name's Rachel Milne. I'm a tax specialist here with the Montana Department of Revenue, and today alongside me presenting will be Adam Seacrest. He's also a tax specialist with the department, and then Brian Olson will also be joining us. He's our field audit unit manager, but he previously served as an income tax specialist for many years before that. So today we're going to be talking about the big changes coming to Montana's income tax system in tax year 2024 and filing season 2025. During our last legislative session, the Montana legislature passed Senate Bill 399, which simplifies Montana's tax code by repealing some of the most complex provisions in our law and aligning us more closely to the federal system. This bill has partially gone into effect with the repeal of several tax credits as of this year, 2022. However, the main part of the bill goes into effect in tax year 2024, and our presentation will focus on those changes. So here's an overview of what we're going to be talking about today. First, we're going to go over our current system, and Adam will discuss how Montana taxable income is currently calculated, so you'll be able to compare that to what is coming down the line. And then we'll cover Senate Bill 399. This is the bill that revised Montana's income tax provisions. And then after that, I'm going to talk about the changes to the law in a format that will follow how we file a Montana income tax return. I'll also address non-resident and part-year resident taxation. And then Adam will cover changes to estate and trust taxation, as well as to pass-through entities. And then finally, Brian's going to talk about how we're going to transition from our current system to the new system in tax year 2024. Before we get started, though, we just wanted to provide a disclaimer that this presentation is current as of December 13th, 2022. As you know, Montana's legislature is going to convene on January 2nd, 2023, and they may enact updates to this law. So this is definitely not final, but more of a sneak peek at what is to come. All right, with that, I'm going to turn it over to Adam.
Thanks, Rachel.
So before going through the changes that Senate Bill 399 makes to our tax system, it's important to understand our current system. I'm going to briefly talk about how we currently determine Montana tax, using as an example the flow of filing Montana individual income tax return. So let's start with the taxpayer's filing status. Here in Montana, we currently have 6 filing statuses to choose from. And those are single, head of household, and then we have 4 different statuses for married taxpayers. We have married filing jointly, married filing separately on the same form, married filing separately on separate forms, and then married filing separately and spouse not filing. The single, head of household, and married filing jointly statuses, they all follow the federal determinations. The married filing jointly status may be used by taxpayers who file jointly federally and also want to file jointly on their Montana return. Married filing separately on separate forms is for those filers who file separately for federal purposes. This status is also used when one spouse is a resident and the other spouse is a non-resident that has Montana source income. Married filing separate with spouse not filing is for those taxpayers who are non-residents and only one spouse has Montana source income, or they are Montana residents who have non-resident spouses that don't have Montana source income. And then the final married status we allow in Montana is married filing separately on the same form. Married couples can make this election even if they elected to file jointly on their federal return. This status is basically filing a tax return for each spouse as if they weren't married, but on the same form. Each spouse's income and deductions are assigned to the spouse who received or incurred them. Anything that can be considered to be owned jointly is split equally between the spouses, unless the taxpayer can demonstrate another reasonable way to split the income or deduction. For many federal joint filers, filing separately in Montana is more advantageous because our current tax bracket is the same for all filers regardless of filing status. Households with dual incomes usually use this status, which we call SEP-SAME, because Montana's tax laws are basically geared toward a single filer taxpayer. Other than divvying up income and expenses between spouses based on who received it, another complicating factor with this status is that these filers are subject to the same federal limitations that a couple filing their federal returns separately would be. So certain adjustments have to be made for items that are treated differently for federal purposes based on filing status. A good example is the capital loss reporting. For federal purposes, joint filers have a $3,000 loss limitation with an unlimited carryover. Separate filers, on the other hand, have just a $1,500 loss limitation with the same unlimited carryover. Of course, these joint filers combine their income on their federal return, and therefore their capital losses are applied jointly. But because Montana treats SEP-SAME filers as federal married filing separately filers, a SEP-SAME filer would be subject to the $1,500 loss limitation, which leads to separate carryover amounts for Montana purposes. Other examples of the separation of reporting based on filing status include passive activity losses and excess business loss limitation. That concludes our discussion of the filing statuses. Now that we have that out of the way, we can actually start to calculate our Montana adjusted gross income, or AGI, taxable income, and then tax. First, let's start with the taxpayer's federal adjusted gross income as reported on their federal form. I will note that Montana filing thresholds are much lower than the federal requirements. For the most part, taxpayers will have already filed a federal return before filing their Montana return. However, for those that don't have a federal filing requirement, they'll still need to figure out their federal AGI because this is the starting point of reporting taxable income to Montana. After the taxpayer reports federal AGI, which includes all federal income and adjustments, they'll add back specific items that are taxable to Montana, as well as subtract specific items that aren't taxable to Montana. Based on current law, several things have to be recalculated to conform to the definition of Montana adjusted gross income. For instance, there are more than 36 Montana subtractions from federal AGI and more than 15 additions to federal AGI. We essentially follow the federal principles of determining taxable income, but put a Montana twist on it with our specific additions, subtractions, deductions, and exemptions. A very complex example of this is our recalculation of the net operating loss carryover deduction to account for everything that is specific Montana purposes that has a federal equivalent, such as Montana non-business additions and subtractions and itemized deductions. After additions and subtractions are applied to the federal AGI, we arrive at our Montana adjusted gross income. At this point, we apply the Montana standard deduction or itemized deductions. Our standard deduction is up to 20% of Montana AGI with a minimum and maximum amount dependent on filing status. For itemized deductions, we mostly follow the various federal itemized deductions with a few that are specific to Montana. We then move on to our Montana exemptions. These standard exemptions are available to all taxpayers, contrary to how it was before the Federal Tax Cuts and Jobs Act. And there are special instances when taxpayers get an additional exemption, such as the legally blind, taxpayers over the age of 65, and those with physically disabled children. After subtracting deductions and exemptions, we come to our taxable income. We apply the corresponding tax rate to this amount to determine our Montana income tax. And then there's one final step required if the taxpayer is a non-resident or a part-year resident. In this case, the taxpayer figures their taxes as if they were a full-year resident and then applies a ratio comprised of their activity in the state versus their activity everywhere to determine their Montana source income. This amount is then multiplied by their Montana income tax rate. And this concludes our review of the current tax system in Montana. So Rachel will now go over the way things will be under the new law.
Thanks, Adam. All right, now that we have a basis in current Montana tax law, I can explain how much simpler Senate Bill 399 makes things. This slide is an overview of the changes that Senate Bill 399 makes. As I said before, the bill has two parts. The first part occurs in 2022, in which these 15 tax credits were repealed. And a handful of these credits, you can see they're denoted by an asterisk. They do have carry forward provisions, and the bill does allow for taxpayers with carry forwards of those credits to use those carry forwards up. The second part of the bill, which kicks in tax year 2024, aligns Montana's system with the federal system. And this is an overall breakdown of what it does in 2024. So taxpayers will have to use the same filing status used on the federal return with an exception for non-residents and part-year residents. The tax brackets have become condensed down to two rates, and they are now based on the filing status. Montana taxable income will start with federal taxable income, as opposed to our current system of starting with federal adjusted gross income. And then there were several repeals of deductions, which we'll discuss a little bit more in detail in a moment. Here's what the 2024 tax table will look like with the federal filing status applied. As you can see, the rates are still progressive, with the lower rate being 4.7% and the top rate being 6.5%. However, instead of our 7 brackets, we just have 2 now. Additionally, the income thresholds are spaced out for single head of household and joint filers, and then these will be adjusted annually for inflation starting in 2025. So let's take a look at the repealed provisions under the bill. These items are all repealed beginning in tax year 2024. So tax year 2023 is going to be last year. Taxpayers report these items on their Form 2. First, since we're starting with federal taxable income to determine Montana taxable income, we'll no longer have Montana-specific adjusted gross income, Montana-specific standard and itemized deductions, and Montana-specific exemptions. And since these items were repealed, that also means that you won't have to recalculate the taxable portion of your Social Security benefits or net operating losses for Montana purposes. Next, the 2% capital gains tax credit is being replaced with a 30% of a taxpayer's net long-term capital gain. So taxpayers get to subtract 30% of the net long-term gain from their taxable income under the new law. And then there are several subtractions repealed, including unemployment compensation, tips for those working in the service industry, deposits into a Montana medical care savings account or an MSA, deposits into a first-time home buyer account, deposits into a farm and ranch risk management account, income of a child taxed to a parent, health insurance premiums taxed to an employee, student loan repayments for healthcare professionals and qualified educators, partial interest exemption for taxpayers 65 and older, the partial retirement disability income exemption, as well as the partial pension exemption. So let's take a look at a side-by-side of the two laws. In the first column, we have a summary of what Adam talked about a few minutes ago. And then on the right is how we'll determine Montana tax beginning in 2024. As you can see, the law has eliminated the need to determine a Montana filing status. And instead of starting with federal AGI, taxpayers will now begin the calculation of their Montana taxable income with federal taxable income. Taxpayers still have certain Montana additions and subtractions, but they'll no longer have to calculate Montana-specific itemized or standard deductions, nor will they get specific Montana exemptions. All right, so now that we have an understanding of our current system, as well as what Senate Bill 399 did, let's talk about how to calculate taxable income and tax beginning in 2024. So here's our new roadmap to determining taxable income and tax in Montana. We're going to start with our federal taxable income. We'll add our Montana additions, subtract our Montana subtractions, which gives us our Montana taxable income. And then we apply the tax rate for our filing status to the Montana taxable income to come to our Montana tax, and then non-residents and part-year residents, they'll apply their non-resident ratio to their Montana tax rate, or to their Montana tax, excuse me. So let's take a look at federal taxable income. And this is a visualization of what federal taxable income is. This is the 2022 Form 1040, the federal individual income tax return. And so you can see that this is how you calculate your federal taxable income. Total income is calculated on line 9 by adding all the income reported on lines 1 through 7 on the 1040 with all the other income reported on the federal Schedule 1. And then on line 10, taxpayers get to report any adjustments to income, such as their IRA deductions or the self-employment tax, et cetera. And they subtract those adjustments from the total income to come to their federal AGI. Now, this used to be our starting point, like I said before, but now, so moving on the 1040, after you have your AGI, you subtract your standard and itemized deduction or itemized deduction and your qualified business income deduction, if that's applicable to you, from the federal AGI, and that gives you the federal taxable income. And again, that's our starting point to determine Montana taxable income. So let's take a look at the additions under the new law. Many of these are unchanged. Taxpayers will still need to add back interest and mutual fund dividends from other states. They'll still need to add back the distributive share of a shareholder's federal taxes paid by an S corporation. Anything that was recovered during the year that reduced a Montana tax liability in a previous year, those non-qualified withdrawals from MSA or first-time home buyer account. But there are a couple of changes to the additions. First is that taxpayers that qualify for the federal qualified business income deduction, they'll have to add that back to their federal taxable income. And then the second has to do with the state income tax add back. So taxpayers have to add back any state income taxes deducted when determining federal taxes to their Montana return. And for individual taxpayers, this will be for those taxpayers that itemize their deductions on their federal return, or for those that their pass-through entity pays taxes on their behalf at a state level. So pass-through entities in a state will actually have to add back all of their state income tax deduction, but it's a little different for individuals. So recall that Montana, since we now start with federal taxable income, the amount of a taxpayer's itemized or standard deduction is automatically included in the calculation of the Montana taxable income. And the add back is the amount so far as it doesn't reduce the taxpayer's deduction below the federal standard deduction amount. So I've included an example because this is a little confusing. We'll take Joe. He's a resident of Montana. He uses the single filing status on his federal tax return. He's itemizing his deductions on his federal return, and his total itemized deductions are $15,000. Included in his itemized deductions is state income tax deduction of $10,000. So Montana statute says he has to add back the amount of that state income tax deducted on his federal return so far as it doesn't reduce his allowable deduction below the federal standard deduction amount for his filing status. Now for 2022, the standard deduction is $12,950. So in order to provide Joe with an amount that doesn't reduce his federal deduction below the standard deduction amount, he'll subtract the standard filing status from his total itemized deductions, which results in an add back of $2,050. And this is the amount of his itemized deductions reduced by the amount of the other state income taxes he paid or he deducted on his federal return. And this still allows him to have a full standard deduction within the calculation of his taxable income. And I just want to remind you that Joe is still eligible for the credit for income taxes paid to another state. This add back does not affect the calculation of that credit. All right, so let's talk about the subtractions to federal taxable income. First, we're going to go over the ones that are where Montana has to exempt under federal law. So these are certain items that we cannot tax just based on federal law. The first is interest and dividends from federal bonds. So this would be your Series E, E, F, G, H, and I savings bonds, as well as your U.S. Treasury bonds, federal government notes, and federal government certificates. Also, Montana cannot tax a Native American's income if the income was earned within the boundaries of their reservation and they live on that reservation. Non-resident military service members and their spouses are not subject to Montana income tax on their salaries. And finally, Montana is barred by federal law from taxing Tier 1 and Tier 2 benefits from the Railroad Retirement Board. The next two slides are going to detail the subtractions that went unchanged as a result of the law and that are still in effect. So state income tax refunds that are included in federal taxable income are still exempt under Montana taxation. The recoveries from a previous year that didn't reduce Montana income tax are not included in Montana taxable income. Military salary of a resident active duty service member is also not going to be included in Montana taxable income. We also don't tax the National Guard members or reservist reimbursement for life insurance premiums or death benefits. And then the 529 Enable account deposits went unchanged even with the new filing statuses. So single head of household married filing separate taxpayers can get up to a $3,000 deduction for their deposits, and joint filers can take up to $6,000 deduction for their deposits. This slide details subtractions currently available to businesses that are still intact under the new law. So business owners can still take the deduction for business-related expenses for purchasing recycled materials. Those business expenses that were not included in federal income due to federal tax credit, those expenses can still be deducted on the Montana return. Marijuana businesses can still deduct expenses that are disallowed under the federal law. Gains on the sale of a mobile home park to a tenants association, a 501c3, or a county or municipal housing authority are still eligible for a deduction. And taxpayers can still exempt up to $50,000 of the gain recognized from the sale of at least 80 acres to a beginning farmer. This is subject to the approval by the Department of Ag. Capital gains and dividends from a small business investment company is still deductible, as well as certain gains recognized by a liquidating corporation. And there are 4 new subtractions. As I mentioned before, the MSA and the first-time homebuyer savings accounts are going away, and they're no longer, deposits into those accounts are no longer deductible in 2024. However, the earnings from contributions made to these accounts from before January 1 of 2024 are still excludable. So beginning in 2024, if a taxpayer decides to continue to contribute to these accounts, they will need to segregate the amount of interest from the amounts earned before 2024, which is deductible, in any interest earned after 2024, which is not deductible. And we talked a little bit about the next subtraction, the 30% of the net long-term capital gains subtraction. This replaces the 2% capital gains tax credit we currently have. And currently our capital gains tax credit is equal to 2% of the capital gain, and non-residents and part-year residents get a 2% credit on their Montana source capital gain. The credit is allowed for any type of capital gain and isn't limited to short-term or long-term. This new subtraction is specifically limited to net long-term capital gains. And while it may seem that a taxpayer is losing out on the benefit of the tax credit because of its repeal, the math does work out to an almost 2% reduction of the capital gains income, with 30% of our new highest marginal rate of 6.5% being just about 2%. And finally, the last new subtraction is for taxpayers over 65 and over. They get a subtraction of $5,500 from their federal taxable income. And this subtraction can kind of be seen as a replacement for the interest exemption and the partial pension exemption that were both repealed. This amount will be adjusted annually for inflation as well. All right, now on to non-resident and part-year resident taxation. There is no change to how income is sourced to Montana as a result of the law. If income was earned in the state, then it's sourced to the state. Additionally, the way non-residents and part-year residents determine their liability is the same. The taxpayer will determine their taxable income just as a resident does, and then apply the appropriate tax rate to that income. Then they'll compute a ratio of their taxable income to the amount of source income. Then this ratio is applied to their Montana tax to come to what their tax is owed to Montana. There is one change for non-residents and part-year residents, and that is the filing status they can use under the new law. If they file jointly on their federal return, they can't file jointly on their Montana return. And if they are filing jointly on the federal return, they'll need to use the single status. So joint non-resident and part-year residents, when they file their Montana return and can't file jointly, they're going to have to recompute their federal taxable income. So now I'm going to turn it back over to Adam to go over estates and trusts and pass through changes under the new law.
Thanks again, Rachel. So Senate Bill 399 simplified the code sections for estates and trusts. What was 40 lines of text has been reduced to just 13. We're talking about code section 1530-2151. And that's the one that subjects fiduciaries and beneficiaries of estates and trusts to Montana tax. The crux of the simplification of this code is that estates and trusts are taxed in Montana in the same manner and to the same extent as they are federally. Thus, the computation of Montana taxable income for estates and trusts will begin with federal taxable income, just like we'll do with individual income tax under the simplification law. Estates and trusts will be subject to the same Montana additions and subtractions as an individual, and they'll even be taxed at the same rate as a single filer. And credits allowed to individuals will also apply to estates and trusts if they're applicable. Regarding the distributions to beneficiaries, simplification dictates that the Montana income distribution deduction for estates and trusts must be recalculated to account for any applicable Montana additions and subtractions. As far as pass-through entity changes, not much is changing for them under the simplification law, other than the applicable tax rates. So pass-through withholding will be at the highest marginal rate of 6.5%, and then the composite tax will be calculated using the federal standard deduction for a single taxpayer. All right, with that said, we're now going to turn the time over to Brian to discuss how we're going to transition from our current system to the new simplified system beginning in tax year 2024.
Thanks, Adam. I'm going to talk, excuse me, I'm going to talk about some transition items and some provisions that were inserted into Senate Bill 399. And in order to understand the idea of transition items, we need to look back on Montana's income tax laws. Because of credits and deductions in Montana law that were not in federal law, or because of different treatment of items based on filing status, some amounts for Montana aren't aligned exactly with the corresponding federal amounts. This mainly occurs in the area of the treatment of some losses. Prior to 2007, most married couples who filed a joint federal return filed separate returns for Montana. The different filing law statuses had laws creating slightly different treatment of some of these items of income and deductions. These included different rules and limitations for items such as capital losses, passive losses, IRA contributions, leading to separate amounts on your books for federal and Montana income tax purposes. A change passed in 2007 by the Montana legislature eliminated a majority of these differences, but only on a go-forward basis. A small population of Montana filers still had differences in some of these items. Some individuals may have been able to absorb these losses and adjust for these differences since 2007, but others may still have differences on their books. Senate Bill 399 allows a one-time catch-up of these items to eliminate any differences between federal and Montana amounts. The election to make this adjustment must be made and reported on the 2024 tax return by the due date of the return, including any extension. You will not want to try and adjust for these items down the road in future tax years, as that adjustment would be denied. Some examples of this could be that you have a passive activity loss that was suspended for Montana purposes, but not for federal purposes. On the 2024 return, you would want to take that amount to true you up with what the federal amount is. That could also have occurred with some capital losses in that you had excess capital losses. You would now adjust for those. When you adjust for these on the Montana return for 2024, you'll want to have some information to support that. The best information is going to be copies of the tax forms and related schedules for the prior years, perhaps some spreadsheet using summarizing those amounts in that. You can include those with the return, or you can just simply provide them if we ask you for those at a future point after the return is filed. These are not a common occurrence. We expect very few taxpayers to have them, but they are something that you'll want to watch for and adjust for on that return. The other area I wanted to talk about was a little bit more information on the savings accounts that was mentioned earlier. The Senate Bill 399 eliminated some of these provisions in terms of the subtractions that were allowed for contributions. You were able to exclude some of the interest and income on those accounts. Under the simplification changes, for the Montana Medical Savings Account and the Montana First Time Homebuyer Account, the interest and income can still be excluded. However, you are no longer able to take deductions for contributions to these accounts. The other note is that with the First Time Homebuyer Account and the Farm Risk Management Account, you do have a requirement to distribute the funds within a certain period of time, otherwise there will be adjustments to income. Those are still in effect, but again, just to repeat, the subtractions for contributions to those are no longer allowed. With that, I'll turn it back over to Rachel and Adam.
All right, thanks, Brian. Well, with that, that's the end of our presentation. So we can go ahead and open up the floor for questions. If you have any, please throw them in the chat box, and we'll answer questions at this point.
I had one direct message to me. Question for Rachel. How
Okay.
will NOL be same on Montana as Fed if there are prior year carryover differences?
So as part of that transition provision, well, actually, so the NOL, we won't have a Montana NOL anymore. And, you know, in 2024 is going to be kind of an odd year because we're getting, you know, because it goes away. There isn't a way to catch up. The bill specifically says that you can't catch up to get to your, so that both NOLs are equal. So, you know, it'll just be kind of like a starting over point, I guess, in a way in 2024, where, you know, magically your federal and Montana NOL will match up, if that makes sense.
Can you verify if no additional contributions to a medical savings account after 2023 are made, but they take distributions? Will the entire distribution, including earnings, be excluded from their Montana income after 2024?
Yeah, so after 2024, folks can still use their MSA accounts as they use them now, where they take money out and buy, you know, or pay for medical bills or things like that. And then those withdrawals are, as long as they are for medical expenses, they're still not included in taxable income. Now, if they take the money out for anything other than medical expenses, then that'll have to be added back. And there may be the penalty may be assessed as well for taking money out that wasn't spent on the medical expenses.
So only the earnings on contributions after 2024 would be taxable on Montana.
Yeah, so the earnings after 2024 within the medical savings accounts are taxable, but that's on earnings. So that's on earnings from principal, right? So like, you know, after 2024, you can't take any deductions for earnings on principal contribute after 2024.
Will capital gains be subtraction on medical savings accounts like interest or dividends on 1/1/24 prior contributions?
What was that? Can you read that one again, Matt? Sorry.
Will capital gains be a subtraction on medical savings accounts like interest and dividends on 1/1/24 prior contributions?
I'm not quite sure I understand that question. I guess if you are receiving capital gains income and as a part of your medical savings account, yeah, that's still not taxable. But it has to be, again, it has to be on the contribution, it has to be on principals or the, you know, the contributions from before 2024.
How are tax programs going to handle the loss of the NOL difference?
Honestly, I think they'll probably, they probably won't find it too difficult because they won't have another form from us to program. So I'm not quite sure from a vendor perspective what that's going to look like. You know, that's one form that we'll probably end up getting rid of, though, under simplification is the NOL.
If a married couple file jointly on federal and they are both non-residents of Montana but have Montana source income, can they file a joint Montana return in 2024?
No, you know, based on our reading of the new law, it's basic. It says that they'd have to file separate. So it says if everybody that filed jointly has to file jointly unless one of the spouses is a non-resident, and or a part year resident, or yeah, unless one of the spouses is a non-resident for any part of the year. And so then they would have to use the single filing status. So it's a little bit of the same idea of kind of what we've got now, where, you know, some non-residents don't file with their spouses. So they don't report their spouse's income as a part of their income in determining their Montana tax. But in that situation, in that example, the two spouses would have to each file their own separate return under the way the law is written right now.
Do you expect drafts of the updated or new forms to be released early for software developers mid 2023?
You know, we have a legislative session to get through. And we're not quite sure what impacts are going to occur as a result of the session. So we're hoping to get the 2024 forms up and running within the next year, but I'm not going to make any promises on when they'll be available to the public.
If one spouse is a non-resident of Montana and the other spouse is a resident, how would they file? There is no option after 2024 to fix this.
So one of the spouses is a resident and one of the spouses is a non-resident. So like I said before, you know, the statute says that they have to file, you know, if they file jointly federally, they have to file jointly on the Montana return unless one of them is a non-resident. So they would both file single.
Do we know if any group or anyone has filed a suit against the state to put a stay on the changes made to the calculation of Montana tax yet due to unfair practice or not enough opportunity for public input on the bill prior to passing?
I'm not aware of that.
Okay. If both spouses are part year residents and they file jointly for Fed, can they file a joint Montana return?
Yeah, you know, we've also interpreted that statute to apply to the part year residents as well. So they would both have to file a separate, both file separate returns.
Is the $5,500 subtraction for 65 and older doubled for married filing jointly?
Yeah, the subtraction is per taxpayer. So if both spouses are over the age of 65, both spouses would get, or both spouses would get the deduction. So it'd be 11,000 for 2024, right?
Okay, do we have any more questions? I've passed one to our specialists in chat. So if you guys want to take a look at that in Teams. If anyone else has any questions, feel free to add them to chat, or you can raise your hand and we'll let you unmute and ask your question. Will there still be an elderly homeowner renter credit?
Yes. Yeah, the elderly homeowner renter credit is not repealed or anything as a part of this bill. It's still around and will still be around, barring anything that happens in the legislature.
Is the $41,000 taxable income threshold for 4.7% tax rate doubled if filing jointly?
No. So the tax rates it's different now because we're going off the filing statuses. So this is what the tax rates will look like now. So married filing joint is at 41,000. And then, so like for a single person, it's 20,500. So hopefully that answers your question.
I just shared some links in the chat. The first one there is where all of our past webinars and resources are available. The recording for this webinar will be available as soon as it's processed through Zoom. That usually happens pretty quickly, but sometimes it just gets stuck and takes a little while longer. But we'll go ahead and make sure that the handout for today is available there. I also have included a link where you can sign up to receive a newsletter specifically about our webinars, and a link where you can sign up for our tax news you can use, which is the department's newsletter on general tax topics where we provide updates and information throughout the year.
All right, well, it seems like we don't have any more questions, so we will sign off. We really appreciate everybody that joined in this morning with great questions. And, you know, this is kind of a new thing that we've been doing, and it seems like we're getting good feedback on it. So hopefully you'll see us again in the next year with our annual updates around this time. If you have any questions, you know, check out our website, and we will talk to you later. Have a great day.